Good evening, everybody. It's 8 p.m. in London, so we can start. Welcome to this new webinar offered by Vantage Markets in collaboration with OneClickFX. I'm Fabrizio, and as usual, I'm going to be your presenter tonight. I want to remember you that the last time we spoke, we mainly talked about the first trading system that we can use with OneClickFX tools. So if any of you should have any questions about the percent pivot or the other templates we can use to do the technical analysis side of our trading, please ask. The chat is active. Are you there? Oh, okay. But Besmir says that it's the first time for him. So this gives me an opportunity to go over some of the stuff we talked about last time, so everybody can catch up and get up to speed. But before we start, I have to remind you that any material and or content provided herein is intended for educational purposes only and does not constitute investment advice on how clients should trade, as it does not take into consideration your personal objectives, financial circumstances, or needs. Please seek independent advice before making any trading decisions, of course. Reliance on such material is solely at your own risk, and the company cannot be held responsible for any losses resulting directly or indirectly from such reliance. Past performance is not an indication of future results. Of course, when we say the company, we refer to Vantage Global Limited. All right. Besmir says it would be great if you show us some opportunities for this week. Well, I had in mind to do just that because this is a particular week, as we already had Powell's, the Fed chair, testimony in front of Congress, and today we had an anticipation of the labor data. And on Friday, we're gonna have the non-farm payrolls, which is going to be an important data that the Fed is going to evaluate in order to decide whether or not they're gonna proceed with another 25 basis points rate hike at the next meeting at the end of March, or if they're going to go back to the 50 basis points rate hike. So far, Jerome Powell did not commit to a 50 basis point rate hike, but the market sees traders basically see nearly 70% chance that the U.S. Central Bank will raise rates by 50 basis points later this month, and this percentage is up from 23% before Powell's comments on Tuesday. I see that Uriel is probably French. I'm sorry, I studied French back in the day, but I can't help you now. I hope my English is good enough and slow enough so that you can understand what we are going to be talking about. So for those who don't know anything about OneClickFX, before we go back to market stuff, it's a software designed for MT4 and MT5. On Vantage Markets is, of course, available for the MT4 platform. And it consists of a profile that employs different templates that are going to help us better and more easily analyze the market in terms of determining the trend. And then it's going to give us technical references to set up the trades. Okay, so on the left side, we have basically a dashboard, which is both a navigation system, a navigation tool. As you can see, I have a preset list of symbols that I want to monitor. They are essentially the 28 main pairs of the Forex market. Then we have gold and oil, the most important indices, and some cryptocurrencies. We also have the US dollar index. So we set up the our custom watch list from here, from the input section of the indicator settings. And then once we save our list, we're always going to be able to scroll through it, simply clicking on the buttons, which is very practical and very comfortable compared to what the Metatrader offers us by default. And the instrument also provides a trend analysis for the short term, because as you can see, for every symbol here, we have the net change, so the percentage variation of the daily, weekly, and monthly timeframes. So for every instrument, we see if we have a short-term trend or not. The symbols that are moving in a short-term bearish trend are those with the percentages, with the net changes aligned and in negative territory, and they're colored red. Those that present symbols that present a short-term bullish trend are those with the net changes aligned and in positive territory, and the dashboard colors them green. So with a simple look at Square Dashboard, we can determine the trend of the single instruments and of the different asset classes. And by asset classes, I mean indices, cryptocurrencies, metals, energy, and also the currency baskets. So by looking at the first row of Square Dashboard, we can see that the Australian dollar is in a bearish tendency, but today some of the currency pairs are slightly in positive territory. As you can see, Australian dollar, US dollar, for example, is losing 2.10% since the beginning of the month, 2.66% since the beginning of the week. And this is because of two main factors. The first is that although the Reserve Bank of Australia raised rates this week by 25 basis points, alluded to the fact that they're near to the end of the rate hike cycle. So this was a bearish news for the Australian dollar, hence the evident negative performance on a weekly basis and also on a monthly basis. And then we also had a Jerome Powell who stuck to the hawkish narrative, and that also boosted the US dollar. So this wide move on a weekly basis on Australian dollar, US dollar is the result of both these events. The meeting of the RBA and the intervention of Jerome Powell in Congress. And as our guest was asking, some opportunities for this week, I'd say that everything that Australian dollar, US dollar is one of the instruments that could present or is already presenting an interesting trading opportunity for the week. Full disclosure, I'm already long on the pair. I already bought it. Actually, I had it last week. I had to buy it again this week. But this is not my analysis for those who are flat, meaning for those who still don't have a position on Australian dollar, US dollar. There's a couple of consideration we can do. One of the things that the percentage analysis allows us to see allows us to see is the average move of the single instruments. On the right side of the screen, where we have the price action here, you're looking at a weekly grid of our percent pivot indicator. Up to H1, you see the daily grid. As you can see, we have a certain number of levels. There are 10 on the upside and on the downside, and these levels are calculated at the opening of the period, starting from the previous close. So tonight at 11 p.m., we're going to have the new daily grid. The starting level is going to be today's close. And from there, we're going to have the positive levels, the potential resistance levels, and the negative levels, the potential support levels. Why is this interesting, and why is this different from any other form of support and resistance that you are probably accustomed to look at and to use for your analysis and trading? These levels are, of course, prices or exchange rates, okay, but they correspond to a particular net change of the market. And you should know that in institutional investors, I know it's a term that says everything, and at the same time it says nothing, but let's just say those who move the market, okay? We don't know who they are, we don't know what they do on a daily basis, but we see they're there because the market moves and moves by a certain amount. When they step in, that's of course a given, and they are used to monitor exactly the net changes, the percentage variations of the market. It's at the news that you hear the Dow today lost or gained 300 points, 700 points. Institutional investors look at the market in terms of percentage variations, and this is why these levels, which are also percentage levels, percentages, are so sensible and so useful to set up our operations. Let me open the chart, put it full screen, and as you can see, every minor or major swing point the market does happens on these levels or around these levels, which means that the market takes a decision, start to move one or the other way when the price reaches these values. Not specific prices, not necessarily Fibonacci retracement, not necessarily the traditional pivots, or any other type of support and resistance that you can imagine. So for example, the 20-day, the 50 days moving average, and the like. As you can see, every time the market changes direction, it happens on one of these levels. These are the daily ones. We can go up, because on H4 we see the weekly ones, as you can see also on H4. All the minor and major swings happen exactly on these levels or just about around these levels. So having these levels, and having these levels when the day opens, when the week opens, when the month opens, is a clear advantage for two reasons. One, because we have very sensible levels where to place our orders, where to open our positions, and also because if we look at in the past, and we can go back as far as we want, because as you can see, by default we have a number of analysis value which is 10, which means 10 days of analysis. I can go with 100. Okay. Well, I'm sorry. Probably I have the locked version, but you should be able to go back in time. Well, what you're gonna notice 10 or 100 periods is the average move of a pair when it trends, and when it goes sideways. So having an idea of what a specific currency pair or index or cryptocurrency or metal does in a day, it's going to also tell you um, where it's probable that the market is going to change direction, is going to rebound, is going to react. And this is actually what I do, what I mostly do in my trading. I wait for the excesses. And yesterday, for example, we had an excess on Australian dollar, US dollar, and we are also in excess on weekly values. I'm going to explain myself. So on a daily basis, from high to low, usually Australian dollar, US dollar makes 90 pips. Okay, so 90 pips are around a plus or minus 0.75%. So when you see Australian dollar, US dollar go beyond the minus or plus 0.75% mark, you can already consider the fact that you are in front of an excess, okay? 0.75, 1%, these are the values where you start looking for a change of direction of the market. And on a weekly basis, it usually makes 190 pips. So this is the weekly high, and this is the relative low, and we are already above the average weekly range. As you can see, we almost touched the minus 3% mark. Now it's making a higher low. So I already have the position, but for other reasons. But if I was flat, I'd be opening a position on these levels. I would have probably opened it yesterday because I am in excess of the average weekly range, and I am in excess on Tuesday. Okay, so even in the case that the market goes against me, I know that I'm already in excess, and then I can open a second position, which is either going to resolve the drawdown on the first one or increase the profit that I'm going to make. Okay. How would you enter this pullback? Well, at this point, on Australian dollar, US dollar, we have an opportunity for a counter trend entry. Okay. So usually I would go either to the daily or the weekly grid, and I would open a position on a percentage level. Okay, with a stop loss below the following level. So and a take profit usually that I usually determine in terms of a percentage move. Okay, in Confluence, and the percentage level that I choose as target usually has to be in Confluence with a previous price structure. I wouldn't open a long position right now if I were flat, only because we're waiting for the non-farm payrolls. They could be interpreted as hawkish once again. They could confirm Jay Powell's narrative, which is still hawkish. And so we are now risking another leg down, basically, on Australian dollar, US dollar. But if we weren't waiting for the non-farm payrolls, I would have tried to enter the market yesterday around the minus 3% mark, or I would try to enter now. Okay, let me activate the levels. Oh, I already had a position here which was the same. This we can say went wrong, and I would place the stop loss below this percentage level, and I would expect at least a 1% rebound, 1.5% rebound. So I would place my take profit either here or here. And I would also do something else. If I were to see the market, and now what is your definition of confirmation to enter? Well, I have different setups for this particular operational grid, and I'm going to go over them. So we have two types of entry here. We have the trend following one and the contrarian one. Now we're attempting a contrarian entry, but the timing is wrong in my opinion. So I would suggest you don't open this long position right now. It could work, but ahead of the non-farm payrolls, I would wait, okay? Only to open this position later in the week. So we have two different setups with this instrument. One is trend following. So the market is going down. The trend is bearish, okay? So we have a starting range. The market is moving downward. So I'm supposed to take trend following entries, okay? So what's the entry? It's the breakout of the support, the pullback, and the change of polarity. And here I open the short position and I place my target on the percentage level that equals the average range of the pair. So it could be a -75, a -1%. And I usually place the stop loss on the level above if it's a short entry. So I can place the stop loss above the previous daily close in this case, or I can place the stop loss above the resistance. So the confirmation, so the setup, the entry setup is structured like this. I have a trend information. So the trend is bearish. So if it breaks support, well, I look for the continuation trade for the trend following entry. So the main factor, the first factor is the trend for the trend following entry. Then I want to see a price action setup. I want to see the breakout of the support or the resistance, the change of polarity. Okay, so the pullback, the retest, I want it to hold as resistance because it was a broken support. Okay, and when I see that the support becomes resistance, and also I have the support of the algorithmic analysis, which is here, the RSI, I open the short position and then I start managing it. Okay, so if this is the entry point and this is the stop loss level, perhaps, or this one, well, seen as the levels are all at the same distance from one another, I know also the risk reward ratio that I'm going to aim for. So let's say that the average daily move from high to low of Australian US dollar brings me here. Okay, I have a 1, 2, 3 risk reward ratio. Not only that, so this is where I place my take profit order. Not only that, but seeing as I have the other levels in between, I can use them as references to start managing the position once it goes in my favor, in my direction. So suppose I see the break below target 1, because this is target 1, okay? I can decide to remove the risk below when the price is below target 1, and I move from stop loss to break even, okay? Then we reach target 2, we go below target 2, I can decide to move the break even order to stop profit at target 2, etc. Okay, as a beginner, is that okay? Samsung SM, which I guess is your telephone. So trend, price action pattern, confirmed. So breakout retest, change of polarity, and confirmation of the algorithmic analysis. Okay, so this is the checklist for the trend following setup. Okay, we're gonna go to the contrarian one, which of course cannot have a confirmation from the algorithmic analysis, which is lagging by construction. So for that one, we're gonna have to trust the levels and the range of the move with respect to the average that we see on the various periods. We have a question from Akina Dose. As a beginner, what is the starting point and how can I understand the trading? All right. Trading and finance are not simple issues, simple subjects, of course, and but that shouldn't worry us. In time, of course, anyone who trades is going to follow the news, try to understand what happens in the macroeconomic environment, what the data releases mean, and what to expect in terms of reaction of the investors, of the participants of the market. But that's going to come at a second stage, at a later stage. Okay. If you are completely new to trading, what you should do is quickly go over the basic technical analysis stuff. So price action, candlestick analysis, you don't have to know every pattern. You just have to know what it is. You go over the basic technical analysis patterns. Well, it's going to take you roughly a week to go over this stuff. You can find it on YouTube. You can find it on online. There are various websites, because most of the stuff that you're going to learn in terms of technical analysis patterns, candlestick patterns, you're not going to use. So the first thing, the most important thing that everyone who wants to trade has to do is to be able to recognize the trend of the instruments. What's the trend? The market moves in a certain direction, up or down, or it moves laterally. Best times for trading, we're gonna come to that. So identification of the trend. You look at a chart. Well, there are various time frames. What's the trend on Australian dollar, US dollar? Well, you gotta be able to tell me that if you look at a chart. But it can be confusing, and the answer is not absolute, because what's the trend depends on the time horizon that you're looking at. So we have created these instruments and various others that are going to tell us what the trend is on a certain time horizon, so you cannot get confused. So on a monthly basis, Canadian dollar, US dollar is bullish or bearish? Is in a bullish trend or a bearish trend? Is in a bearish trend. US dollar yen on a monthly basis, is it in a bullish or bearish trend? Is in a bullish trend. So when you look at a market, you should be immediately able to identify the trend of the market, because that is going to tell you which is the direction that you have to follow, and or the type of move that you are going to wait for it to end in order to take the contrarian position. So establishing the trend, and we have this instrument for you. It's going to teach you to it's going to tell you what's the short-term trend on a daily, weekly, monthly basis. Okay, and it's also going to teach you to observe the market in terms of directionality within a certain time horizon. And then after you are able to identify the trend of the single instruments, you're going to have to learn to link the trend of the different instruments. So Australian, US dollar, yen. it's going up. Why? Is it the dollar that's going up? Is it the yen that's going down? One is going up and the other is going down. So you're gonna have to learn about the relationship with the various instruments. So the indices are correcting right now. Okay. So if all the indices are moving upward, if all the indices are moving downwards, it means a certain thing. It means that you also have the opportunity to buy speculative currencies, for example, the Australian dollar, the Canadian dollar, the New Zealand dollar, probably oil, probably cryptocurrencies. So the important thing is to learn how to look at the market in its entirety, and you need an instrument that simplifies that. And this instrument is quite what you're looking for, I'd say, because it shows you, even with the use of color, what is the trend, and it puts you in a position to see what goes down at the same time, what goes up at the same time, and these are the market correlations. So first things first, you understand how the market moves overall, and then when you understand how the market moves, then you have to move to a system to open the positions, to place the stop loss and the take profit, and this is why we created the operational grid. So one-click effects can be yours for free. You just have to open a live account with Vantage Markets. You don't have, I think you don't have to necessarily, no, you have to fund it with a small sum, and you don't have to trade immediately, but you have to start looking at the market through the lens of these instruments, and that's going to be mighty helpful, I'd say. Samsung asks what are the best times for trading. Well, this is not one. For example, the one when we talk, I mean, Wall Street is about to close, Europe is already at dinner, and in Asia they're still sleeping. Ideally, the best time to trade is when the European and the US session overlap. Okay, so if you're in Europe, we're talking about from 2:30, I think, in London, 2:30 in London, 2:30 p.m. Up to 5:30 p.m. I'd say that's the time window where the biggest moves actually occur, because you have both capital coming into the market from Europe and from the United States. So if you're looking for big moves, that's the time, both on indices and on currencies, okay, and also metals and oil. That's also the time range where the most important macroeconomic releases are published, okay, are published. So that's the window, okay. Usually the Asian session, which is also called the central bank session, is a small range, so there are not so many trading opportunities unless for example, you have the Reserve Bank of Australia meeting, okay, or the BOJ meeting, which is going to be tonight or tomorrow morning, as you can see here, at 4 a.m. Well, sometimes I'm awake at that time, but I'm not bracing myself, because they're not going to do anything. So perhaps we're going to have a continuation to the upside on US dollar yen, and the yen is going to probably do poorly unless they say something interesting during the press conference. But I don't know that. Okay, so between 2:30 p.m. and 5:30 p.m. is usually the best time. And that's when you're going to look for continuation patterns. And while at the end of that time window, that's when I usually step in. You have the best contrarian opportunities, because when the daily move is complete or can be considered complete, that's when you have the opportunity to scalp a few points from the lows or from the highs, or intercept the start of a contrarian move. Mohammed asks if the recording will be available because he missed the start. Of course, the recording is going to be published on Vantage Markets YouTube channel. I think tomorrow morning. Within tomorrow, you're gonna have the recording, okay? And you're also going to find the past ones, where I explained in detail, in even more detail, the various indicators, the various setups. Today, based on your questions, we are talking a little bit more in general. But if you go and look the past webinars that we did in collaboration with Vantage Markets, well, that's going to be useful, I think. So I think we are up to speed. By the way, today we don't see big moves. So I opened the long position here, but I specified that perhaps it's not the best time of the day and of the week for certain reasons. Certainly at this time, there could be an opening for the contrarian positions. It's not unusual that I open positions at this time, but I usually know that chances are I'm going to have to open a second position later on. But say I think I made clear what the directional setup consists of. I can show you one for a long position, for example. Let's see if I have a daily one. Let's see the US dollar. Well, oh, US dollar Canada, I probably have it. Let's go to the 30 minutes time frame. Okay. Perhaps somebody already saw that the change of polarity of the resistance is not perfect, but we're gonna pretend it is. So US dollar Canadian dollar has been going up for a while now. It's not a steep move, but it's going up. Okay, and also the Canadian dollar is kind of weak, and today particularly weak. It's the currency that moved most of the others, more of the others. It's losing 2.44% on its basket compared to the strongest currency, which is the pound sterling, which is up 1.23% on the basket. All the other currencies are not doing anything today. So the Canadian central bank left rates to the previous level. They didn't do anything, and so we have a weak Canadian dollar. So, for example, to the friend Ekinados, who was asking what should I learn? Well, in time you're gonna learn to follow this type of data and realize a particular move on the market, what's the reason behind it, okay? So we have a strong US dollar, a weak Canadian dollar, and the pair, of course, is going up. So here we have an example of a bullish entry, a trend following entry. So from Square Dashboard, we see the trend is long. USD CAD is green. We have a consolidation phase, and then here the market breaks resistance inside a bullish trend. We have a breakout, a retest, the resistance becomes support. Here I open the long position. Why do I open the long position? Because I have the trend, the price action condition, and the algorithmic analysis that supports the strength of the market, the strength of the buyers, and the potential continuation of the move. I said the Forex major, from low to high, they usually do 0.75 moves on a daily basis. So this could have been my target. This was a 1-to-2 risk-reward ratio. And as you can see, before the European close, we would have already taken our target. Then the market continued up. Here, we could have looked for a contrarian entry. It wouldn't have worked, okay? It takes some experience, even some intuition, but mostly experience to decide when to enter a counter trend position. So for example, yesterday, a short entry on a trending instrument, which is awaiting for potentially even more bullish news. There was the ADP data from the United States, the rate decision of the Canadian Central Bank, then the non-farm payrolls. If you want to go counter trend, you don't do that on Monday. You don't do that on Tuesday, unless what you're looking for is 25, 35, 40 pips, depending on the volatility of the instrument, that the market is going to have to pay immediately intraday within the close of the market. That's what you can expect from this type of entry. Okay, but going counter trend, expecting this type of move on Monday, Tuesday, and well, it's not efficient. You're going to take the entire week against your position with good probabilities. Okay, so my entries are either intraday to take 30 to 40 pips depending on the instrument, let's say 25 to 40 pips. Sometimes it's 50 if it's Euro New Zealand dollar, for example, which is more volatile than US dollar, Canadian dollar, than Euro dollar, etc. So on an intraday basis. On a weekly basis, I'm going to wait usually for Wednesday, Thursday, or Friday to make my counter trend move. So here we have a continuation trade, a trend following trade, and I introduced the subject of the contrarian entry. Of course, for the contrarian entry, we can count on the confirmation of the RSI, for example. Now, this indicator here can be set on different oscillators. So if I go to the settings, the name is Algo MTF. I can also ask the analysis of the stochastic oscillator. And I can give the stochastic oscillator the values that I prefer. Where is it? I can see it. Maybe they're fixed for the stochastic. But anyway, I can also use the stochastic oscillator. But even if I use the stochastic oscillator, unless I go to the 1 minute time frame or the 5 minute time frame, the confirmation of the counter trend entry is going to be late. It's going to arrive to me. It's going to be delayed with respect to the optimal timing to open the trade. And I advise against looking at the 1 minute, 5 minutes stochastic or RSI for confirmation, because as you can see, it's quite erratic before it starts consolidating in the opposite direction, going from positive to negative territory. well, the trade is gone because these are 22 pips, and the market, the stochastic started to stabilize here. So on an intraday entry that aims to make 30 pips, if I lose the first 15, 20, well, what's the reason to open the position? I already missed the trade. So when I want to open the contrarian position on the daily, weekly, monthly, that doesn't matter, support or resistance, such as the plus 1.5% here, for example, well, I have to bet on the level. But I don't randomly choose a particular level. As I told you, I reason in terms of average ranges on the time horizon that I'm looking at. And I also, as all the other technical traders, I look to the left. So for example, US dollar, Canadian dollar, let's see. Akinados has another question. I'm going to be, I'll respond as soon as I complete this subject. Oh, as you see, I was going to tell you what's the average range, weekly range is close to, it's just about 220 pips. So this is the weekly grid, this is the low, this is the high. As you can see, on today's high, we were above the average range. So this is a good level to try a counter trend position, but it's a particular week, so perhaps it's not the best idea. If this wasn't a particular week, I would have tried to open a short position here, not only because we are already in excess territory on today's highs, but also because we are on previous resistance. As you can see here, we broke this high. We didn't see these levels from the beginning of November 2022. We just broke this level that held as resistance for months now, for 5 months now. So this is a good place where to open the counter trend position for a pullback maybe of the previous resistance in confluence with a percentage level. Okay, I'm not going to open the short position on US dollar, Canadian dollar now, but this would have been a good level. And if today was Thursday, it would have been even better. But I already have an excess here. So if I open a short position now, but this is my style. If I open a position now, I can place a stop loss here and see if the market does the correction now, and I can take the stop loss if the market if it comes to that, and try again at the following level, or I can do away with the stop loss, and considering the fact that I'm already in excess territory compared to the weekly average range, if it goes against me another 50, 60, in this case 70 pips, here I'm going to open a new sell position, and I'm going to be here at break even, and from here I'm going to profit. Okay, then I'm going to choose whether to close at break even or bet on the continuation of the correction based on other factor as well. And one of those can be then the algorithmic analysis. In that case, I would look at the stochastic or vortex. Let me see if we have the vortex here. Yes, we have the vortex. And I, most importantly, would look at the performance of the Canadian dollar overall. Because I don't want the Canadian dollar, if I want to intercept a particular move, I don't want on the Canadian dollar, a pair that contains the Canadian dollar. If I'm betting on the Canadian dollar, I wanted to see the Canadian dollar do well against everybody else, not only against a single currency. Because when the market makes big move in currencies is when the particular currency, the single currency, is moving in the same direction against everybody else, which means it's strong. Okay. Yes, Samsung. Before that, okay, no, let's see that right now because we're talking about this, and then I'm going to answer the question Akinados posted. Well, average ranges, you can look at this in terms of percentages. And so you can simply look in the past and see what the market does on the week, on a weekly basis, on a daily basis, etc. Or you can look online. There are certain websites where the information is available. I myself have a specific indicator that tells me that, taking into account 1 year historical data. So I can tell you that I'm going to tell you the majors because they're very similar right now. There have been more pronounced differences in the past, but they're kind of aligning. So the Forex major, Australian dollar, US dollar, euro dollar, pound US dollar, New Zealand US dollar, Canadian dollar, and dollar yen usually make 90 from 90 to 100 pips per day. So you are above that, regardless of the fact the market is going down or up, you are in excess territory. So 90, let's say 90 to 100 pips per day. So this is the Australian dollar. This is the euro. This is pound US dollar. They are basically, well, pound US dollar is a bit more volatile. So it makes close to 140 pips per day. Then you have the New Zealand dollar. You can then jot them down when you see the recording. You can write them down right now. New Zealand dollar, US dollar does a little bit less on a daily basis. It makes usually 85 pips. Okay. US dollar, Canadian dollar does 100 pips. So it's in line with the Australian dollar and the euro. And then we have dollar yen, which is even more volatile than pound US dollar. But since as I have been calculating this average range in the past year, we should know that in the past year, we saw the attack of the BOJ, because the BOJ, in order to provide yield curve control, in order not to let the 10-year yield go above a certain number, which was 0.25, had to buy a lot of bonds, and that was negative for the yen. They sold the yen to save their corporate section, which couldn't bear yields above 0.25%. Now they brought the level, the top level to 0.50%. But into that number, so 155 pips per day on US dollar yen, well, there's the effect of last year's performance, which of the yen, which was tragic, but it depended on the monetary policy of the BOJ, basically, and their attempt to save the corporate world, just buying every bond that was in circulation. On the indices front, it's a little bit different. Of course, they're more volatile, so you don't go short. If it's going long, you don't go short at 0.75%. You don't go long at minus 0.75%. Okay. And you don't go against the market if it's, for example, in Europe, I don't know, 4 p.m., 5 p.m., it's getting dark outside. Perhaps we can get confused and think that the trading day is about to end. But at that time, it's not even lunchtime in New York. So if they're buying the indices, if they're buying the S&P 500, you don't go against it at 5 p.m. in Europe, because there's half of the trading day which is still missing in New York. And if it's going up, it's going to do its full range, and you're gonna suffer the entire rest of the day on your position. Okay. And the DAX 40, let's see how it moves. I think it's 260 points, which in percentages are basically 1.5%. Let's say 1.5 to 1.75%. This is the DAX 40. And the performance of the S&P 500 is in line. The average of the S&P 500 is in line with that. They go from 250 to 350 points. Okay, this goes for the indices, the European and US indices. Consider from 250 points to the 350. So you are in excess territory above that in both directions. Well, and then also you're gonna see that metals have very different types of volatility depending on the day, depending on the data. So, for example, here I bought gold. I don't even remember when. Okay, so for the trend following entries with this operational grid, you start from the trend, and then if we have a breakout of the support when the trend is short, of the resistance when the trend is long, and you also have the support of the algorithmic analysis, well, you try the trend following setup. You can wait for the change of polarity of the level, or you can place a breakout order. That's in your discretion. Okay. And then you're going to use the levels to place the stop loss and the take profit. So a short entry here would have had an interesting target here, because on the minus 75% level, because there's a confluence with previous price structure, or even below here as another percentage level in confluence with a previous swing low, and on a percentage level, which is coherent with the average range of the daily average range for gold, which I'm going to tell you in terms of points how much it is. It's basically 20. Let me see. Here it's 250 points, so it's a 1.25%. Okay, from top to bottom, 1.25% is the average. Once you are below or above, of course, well, you're in excess territory. So this is to recap the ranges. I hope I was clear. And there was an interesting question: what is the total amount to start the trading? Well, trading, you're gonna hear people talk about this very differently. Well, if anyone should call you up at home over the mobile phone and tell you, well, give me a couple of $100 and I'm going to make you rich, well, that's plain lying. Okay. You're going to find those that tell you that you need capital to make money in trading. Well, that's not true. That's not true at all, because you have leverage, because you have CFDs with micro lots. In Forex, that's a given. It's been a given for years now. So you don't need 100,000, not even 50,000, not even 20,000, 10,000 to start trading. What you need to start trading is to learn how to do it before You put your real money in it, and you should consider that you're going to lose some money. So if you're running a tight ship and you can't afford to lose some money for learning purposes, well, perhaps it's not the best time to start trading. You should paper trade, so use demo accounts for a while. You should take into account the fact that you're going to lose money the first year. You're not going to make money, okay? Don't trust who tells you anything different. Perhaps you're not going to make money even the second year. So there's a learning curve. It's different for everybody. It's faster if you have instruments that help you to understand the market. So I'd say ideally you should have some money that you don't need for anything else. You don't need for shelter, you don't need for food, you don't need to support your family, etc. So it's good if you have some money that you can use at the right moment. I'd say you can start if you want to open an account and start doing some experiments. You need I'd say €1,000, £1,000 if you're in England. That is a good place to start. Of course, what you're gonna have to do is to use sizes. So open positions with a value which has to be very low, because if you start opening 0.10, 0.20, 0.30 on €1,000 account, well, if you don't know what you're doing, they're gonna go away pretty quickly. I have some experience, and I have experience in transforming 1,000 in 5, okay? But I have a consolidated trading system. I know what to do. I have other money that I can put in if I need margin, because I don't want to leave that particular money to the market, okay? So it's actually possible to make good money out of little money in trading, but you have to be good first. You're not gonna start with 1,000 and gonna find 10,000 in your account in 2, 3, 4 months. That's possible, but you have to be good. So get good, and then you know that it's actually a job that can make you plenty of money from small sums. It's actually a good policy, a good way to go about it, to use accounts, very small accounts, that you treat well and that you try to maximize, but that at the same time are going to be kind of your overall stop loss. So you have 10,000, you don't put in 10,000, you put in the broker 10,000. You have to put it on one account, then you open a second account, okay, and you put there 1,000, and that's what you're going to trade on, the $1,000, not the 10,000 altogether. That's a good way to go about it. And doing that for some time is going to teach you how to make that 1,000 become much more. But it's not easy. It takes a while to get to that level. So everyone should start and see if they can manage to do that. But if I have to be seen as I want to be honest, I'm going to tell you that that's not going to happen in 2 months, okay? So in order for you to start and not lose everything in 10 minutes, I'd say €1,000 could be a good place to start. And when you go with a €1,000 account, you open positions of 0.01. Of course, you're not going to make money with these types of positions unless you do, for example, anti-martingale strategy, but so you're not going to make money, but you're going to learn to stay with a position, to stay in the market. You're going to learn how to trade, but it's essential that you don't use the leverage since the beginning, because with €1,000, and that's how you can make plenty of money out of €1,000, you can open positions of even 500,000, okay, with the appropriate leverage. But if you open 500,000 on a €1,000 account, well, it can vanish. That €1,000 can vanish in 2 hours. Okay, so 1,000, but please don't use too much leverage, or don't use leverage at all, and stick to the micro lots and you'll be fine. That's a good way to practice. Okay, and having this instrument can help you a lot. This is not the last webinar that we're going to do. There's going to be soon a new one. You have the past ones at your disposal. My suggestion is that you give a look, you take you check it out, because it can be extremely helpful. My system, my personal trading system, has a couple more indicators, but I use this operational grid to do my trading, and this is the indicator. It's not the only one I use, but this is the indicator that turned me into a profitable trader some years ago. And if I made it, you can do it as well. You have to put in the effort and never give up, and try not to lose too much money in the way to becoming a profitable trader. One-click FX, it's really a good place to start for beginners, because you also have 2 other templates that are even simpler. They can teach you how to read the price action, for example, here, and you have the tutorials. So I explain in these tutorials. You can find them in the license profile. You can find them here, what the indicators say, what the best setups are, etc. So aside from the webinars, the live events, you can also learn how to use one-click FX directly through our tutorial playlist. Okay, so Samsung, I'm okay, thank you. I appreciate that we managed to talk about useful things tonight. I don't want to keep you for too long. Okay, we just opened a position today. I don't think it's going to go well right away, but you never know. Of course, it gives me 25 pips margin. I'm going to eliminate the risk. I'm going to move the stop loss, of course, and then we can discuss about how it went the next time we talk. If you have any other questions, I'm here for you to answer. Just to make this to repeat this one more time, one-click FX can be obtained for free. All you have to do is to ask your account manager at Vantage to open an account, a live account, and then they're going to, after a small deposit, they're going to give it to you. Basically, they're going to give an open-ended license. So for as long as you're going to stay client, for as long as you have, you're going to have a funded account, all these instruments are going to be there for you. Okay. I could tell you actually when our next webinar is going to be. Let me check it out quickly so I can give you an appointment, so to speak. Although of course the broker is going to inform you with their newsletter. Well, our next live webinar is going to be in English language. Is going to be on the 19th of April. In the meantime, should you decide to ask for one-click FX, and should you have any problems, there's also a ticketing system. I personally do the assistance. So besides the tutorials and besides our next live webinar, should you have any trouble with the indicators, should you need any clarification, you can always reach out, and we're going to be there for you. With that said, good night, everybody. I hope to see you next time, and I hope you'll have a lot of questions for me after having tried the indicators. And I also would appreciate a lot if you had some experiences to share with us on how the setups worked, on how the indicators are treating you, on how they are helping you or not to better understand the market. Good night, everybody. Thank you for being here.